explain what's happening, we're joined by now Simon Michell from FIIG Securities. Simon, great to have your company on the show. I want to start with this story because regulators obviously clamping down on these individual sales. Can you just bring us up to speed on what's actually going on?
Absolutely. Good afternoon. Look, this refers to Tier 1 securities, a new version of Tier 1 securities that has come about on the back of changes to capital regulations for banks. And here in Australia, they'd be known as hybrid securities and convertible notes. And it generally refers to the ones that contain non-viability clauses in them. So people have been buying bank hybrids for many years. They act quite comfortably. They provide a good return. But since the GFC and the changes to capital regulations, we've seen a change in the structure of these to provide more risk of conversion to shares, to provide a possible complete write-off should banks' capital limits be breached, and just not as many protections for investors, such as a step up in the margin if they're not paid out on the call date, and no firm maturity date. So the concerns are that these notes are being sold to investors, especially retail investors, without these changes to the level of risk being identified and communicated. So we've seen the UK government, or regulators I should say, come out and ban the distribution of these to retail investors. There are some flow-on effects to this as well. So we've seen these types of securities removed from some indexes. We'll see some of the fixed income funds no longer able to include them into the funds. So that's going to impact on liquidity. There are certainly hybrids out there that we're very comfortable with, but these should not be seen as an option for fixed income allocation. Because of those additional risks, they're highly correlated to equity, so they're just not going to provide the sort of protections that investors would expect in times of market stress.
Yeah, so Simon, bring it home for us, because we've seen a sort of run-up in bank hybrid issuances here in Australia. So could we see a similar ban on these, and what will be that implication for us here in Australia if that happens?
Yes, we saw a report from ASIC late last year highlighting their concerns on how these were being marketed. For retail investors, this has been the most largest level of access that they have to fixed income instruments, because the bond market has been difficult to access until recent years. And investors tend to buy them on the headline name, which is one of the major banks. So very comfortable with them from that perspective. It will impact on price. It will impact on the margin that these notes need to trade at. And I think that it is possible we could see some flow-on effects from those bans over in the UK flow through to the Aussie market and just restrict the issuance or the buying to more professional investors or sophisticated investors in this country. So, I would just suggest that any investors that are holding these hybrids that have non-viability clauses, just talk to your financial advisor or have a bit of a look at the detailed issuing documentation.
All right, more broadly in the Eurozone as well, last night we saw some pretty negative data out of Italy, of course, seeing that go into recession. We've also seen some more negative data out of Germany as well. Put this into context for us, particularly given we've got the ECB meeting tonight. Could we see Draghi perhaps hint to more QE or hint to bringing in a QE process? Look,
absolutely. He has another tool in the box, and that's asset buying. So far, they've really focused on long-term refinancing operation, which is about incentivising the banks or providing banks with money for the banks then to lend out to non-financial small and medium-sized businesses, try and generate some growth that way. Now, if they don't feel that that's having the desired effect as quickly as they would want, then they can look at doing some asset buying, and that would provide more liquidity into the market as well. Look, they might give the long-term refinancing operation a little bit more time to see how that works through. I think that sort of low growth or negative growth in Italy and softer data out of Europe should be seen in the context of the geopolitical situation over there. Russia's a big trading partner. They're looking at possibly implementing some sanctions back onto some of the European countries. That could impact on exports, for example, out of some of the European countries. So there's a bigger picture here at play, and I think the ECB will take that into account when they meet tonight.
All right, Simon Michell from FIIG, thanks so much for joining us.